Alright guys, welcome to a brand new video. Of course, it's Profit Gang. You already know what it is, okay? So in this video, I'm about to take you guys on, a journey to understanding the language of, trading the financial markets, okay? So I'm about to go into some of the terminologies used in communicating when it comes to trading the financial markets. Okay, I'm going to be diving very deep into some of these things because they are very basic, but they're very powerful in understanding the entire landscape of the foreign exchange market. I'm going to be diving into some of these terminologies in detail. Okay, so if you have not seen the last videos on how the market operates, basics about the market, and of course how to open a trading account and how to understand how to use MT4, MT5, and of course TradingView, please, you need to see those videos before you see this video. Okay, everything is being done in a very sequential manner, and I need you guys to follow up with the learning just like I'm following up with giving you guys these topics one after the other. So without any further ado, man, let's jump into the PC right now, and it's about to get very busy, man. I'll see you guys in class. In this video, I'm going to be going over some of the foreign exchange terminologies, right? Now, if you want to understand any discipline, any profession, any career path, it's going to pay well for you to learn the language of that particular profession, okay? So before we even get into trading the foreign exchange markets itself, we want to understand some of the terminologies that are used in trading the foreign exchange market. Now, I'm going to give you guys very few because most of these things, again, like I always say, you can just go on the internet and familiarize yourself with most of these things. They're very simple things that you can easily just check out on Google, right? But there are some of them that stand out to me, the way I trade and things of that nature. So yeah, without any further ado, man, let's dive into it. So the first one I'm going to bring to your attention is something we call a trend in trading the financial markets. Okay. Now, even before I get started, I just want to make a correction, right? Now, I know I've been saying Forex market, Forex market, Forex market, but really what we are talking about is the financial market, right? What we're actually talking about is the financial market, but we are focused on, foreign exchange within the financial market. So if you hear me say things like, what's being traded on the Forex market, right? If you hear me say things like what's being traded on the Forex market, I actually mean what's being traded on the financial market, because when you start to think about the fact that we can also trade stocks, we can also trade crypto, we can also trade derivatives and things of that nature, then you can start to understand that these things are outside the world of Forex, which has to do with foreign currencies. Okay, so my mistake there. I just wanted to make that quick correction. So when I'm talking about the Forex market, I'm specifically talking about trading currencies and things of that nature. And then when I'm talking about the financial market, of course, we could be talking about trading stocks. We could also be talking about trading bonds, trading crypto and things of that nature. Now, I also want to mention that the concepts and the strategies that I'm going to be teaching you guys are very much applicable on other asset classes as well. It's not just in the Forex space, and I'm talking about trading currencies. So you can also use these concepts. You can also use these strategies to trade the stock market. You can use them to trade the crypto market and so on and so forth. So yeah, let's get back to the terminologies. Now, one of the very most important terminologies I need you guys to understand is something called trend, okay? And a trend is simply the direction of the market at any particular point in time, okay? I need you guys to understand trend. So just like, when something is trending, okay, we have this saying whereby we say, okay, that's the reigning thing, okay? That's the trending topic on Twitter. That's the trending picture on Instagram, or that's the trending video on YouTube, or that's the trending video on TikTok, right? So we already understand the idea of what a trend is. Now, when you relate that to, trading the financial markets, we can now understand that wherever the trend is going is the, direction that the market is going at that particular point in time. So the trend simply means the direction of the market, right? Now, the market can only go in certain directions Okay, the market can only go in certain directions. There's a limited number of directions that the market can go, right? Now for this, I'm going to jump straight into the market. And of course, I'm using TradingView, and I'm using the app version of TradingView, meaning you can download TradingView locally on your PC, and then you can use it as a software on your PC. And also you can use the web version as well. So talking about trends, I'm going to go to the daily time frame. Now remember in the video from how to use TradingView, if I want to go to the daily time frame, all I need to do is press 1D and enter. That's going to take me to the daily time frame. Okay, now I'm on the daily time frame of this market right now, and of course we can see how the price is coming downwards. Okay, so looking at the candlesticks right now, we've talked about candlesticks as well. We can see something like a descending structure, right? It means the trend is coming down. Now if I get out of candlestick mode here and I just go to line charts, okay, now on the line chart, what we can see here is the market, first of all, using our path tool, the market was able to travel from this price here all the way to that price there. And then it played around this for a little bit. And then this is what it's currently doing right now. So in terms of direction in this market right now, I can tell you that this market has been, buying for some time. It has sold for some time. It has bought for some time. And right now is selling based on just what we can see right now. So the current trend of this market right now is a bearish trend. Okay, which bring us to the next terminologies that we're going to be talking about. So there are two terminologies to indicate when the market is buying and when the market is selling. And what I mean by when the market is buying, I mean when price of that particular market is ascending and when the price of that particular market is descending. Okay, so when the price is ascending, meaning when the price is going up, meaning when the market is going up, also means the market is bullish. Okay, also means the market is bullish. Now, bullish comes from the idea of the fact that the buyers in the market are called the bulls, and the sellers in the market are called the bears. Okay, so these are terminologies for you guys to withhold as well. Okay, so the buyers in the market are called the bulls. So when there are a lot of buyers in the market, obviously these guys are going to push the price of the market to the upside, and we are going to have a bullish market. Okay, so pay attention to the terminologies that I'm using. I've talked about trends. I've talked about the bulls, which are the buyers. I've talked about the bears, which are the sellers. And I've said when the market is trending to a particular direction, for example, if the market is trending to the upward direction, it means the bulls are in control of the market at that particular point in time. So therefore, the market is now bullish. Okay. And when the market is descending, meaning when the price of that particular commodity is falling, it means that the bears are in control of the market at that particular time. So therefore, the market is bearish. Okay. So yeah, I need you guys to take hold of these terminologies. Again, when it comes to executing your trades, okay, in terms of what we call executing our trades, if I'm going to buy the market, I can say I'm going long in that particular market. It means obviously I'm buying the market. So going long in the market means, okay, I'm trying to buy the market. Okay, so if I say, wow, Euro USD is going very long right now, it means Euro USD is buying. It means Euro USD is in an uptrend. Okay, it means the price of Euro USD is going up, is increasing. That's what it means. Okay, now again, selling the market, we know it to be shorting the market. So if I say I'm going to short Euro USD, it means I'm trying to get into a sell trade on Euro USD. Okay, so longing the market is taking a long trade, is taking a buy trade rather. Longing the market is taking a buy trade, and then shorting the market is taking a sell trade. Okay, these are some of the terminologies that I need you guys to understand. Okay, I need you guys to understand these terminologies. Now that I'm teaching you guys how to understand the terminologies in the market, it's going to be very good for me to attach how to use some of these tools in the market. Now remember, in how to use TradingView and video, we brought out some of these tools here. Okay, now a tool that we can use to map out the trend of the market, okay, is the path tool. So all you need to do to use the path tool is to zoom out of the market, right? You need to zoom out. You can't see the colors of the candlesticks. You can't see, it's almost like you can see a line chart. Okay, it's almost like you can see a line chart when you zoom out of the market completely. Now, zooming out of the market completely is you kind of like taking a macro view of the entire market. What is the market doing overall? What's the overall trend of the market? Now, looking at these markets right now, of course, you can see that the price has been dropping. Okay, the price has been dropping for a very, very long time. Now, if I take my horizontal line tool and put it right here, okay, you can see that that was the price of that item at a particular point in time. Right now, the price has dropped from all the way up there. That's about 1.49197. All the way down, the price dropped to, 0.95472. So if I ask you to map out the trend of this market right now, the trend is simply the direction of the market. So you can pick the highest price that you can see, okay, using your arrow tool. So that's the highest price, all the way down to the lowest price there. So the trend definitely over this particular period of time has been a downtrend, okay? So not to forget that the trend is simply just the direction, okay? The trend is simply just the direction. So again, for example, we have a market that looks like this. So this is the market that we're looking at right now. And then the trend, like I've said, is simply just the direction. So this is what an uptrend is going to look like, okay? And then, this is what a downtrend is going to look like, okay? So that is for uptrend, and this is for downtrend, okay? Now, what I want to do is I want to draw another one. So I can make certain illustrations using the idea of trend, right? Because now I think I'm done with the terminologies. And like I said, I'm going to get into some of these terminologies because they are very, very key in, the next aspect of what we are going to do when we get into, technical analysis properly. Now, again, let me just mention what technical analysis and fundamental analysis is, right? So in terms of these terminologies, you're going to hear people say, well, technical analysis is telling me that the market is going to go down, which means technical analysis is telling me that this market is soon going to, get into a downtrend, or fundamental analysis tells me that this market is going to go to an uptrend. So what is fundamental analysis and what is technical analysis? Okay, fundamental analysis and technical analysis, they are both two ways of analyzing the foreign exchange market, right? In terms of trading the foreign exchange market, it simply has to do with you making a decision to either buy the market or sell the market, okay? But how do you come to, making that decision? You need to do something called either fundamental analysis or technical analysis, or a combination of fundamental analysis and technical analysis together, right? Now, let's start with fundamental analysis. Fundamental analysis is simply basically trying to understand what economic events have to do with the foreign exchange market, how certain economic events affect the price of the market. By economic events, I mean news events, okay? So there are certain very, very important economic events that affect the price of commodities in the marketplace. Talking about things like your NFP news events, talking about things like your CPI news events, talking about things like your GDP report for a particular country or for a particular region of the world, and things of that nature, okay? Talking about things like new home sales, talking about things like unemployment rates. So these are very, very key statistics that are being released every now and then in the foreign exchange market, and we call them news events, and they are what we use to analyze the market from a fundamental perspective. Now, how it's done is we try to predict how these news events will affect the price of the market. Whereas in technical analysis, we are looking at the market itself. We are looking at the structure of the market. How has the market been moving over time? And we make our decisions based on what we can see in the market, not necessarily paying attention to whatever the news is going to report. Okay, so keep that in mind. Now, when it comes to trend, we understand that this is a downtrend, and also we understand that this is an uptrend. So yeah, what about when the market is not trending to a particular direction? We have a scenario whereby the market is kind of moving sideways and it's not really trending to a particular direction. It's not going up, it's not coming down. Okay, the next terminology I want to make aware to you guys is a terminology called market structure, right? And we're going to talk about this extensively when it comes to technical analysis for real. But simply, market structure is the nature of the trend. Okay, market structure is the nature of the trend. Now you can observe something, and we're going to go to the market shortly. When the market is in a downtrend, it just doesn't fall down, in a straight line, in a slopey line like this, right? Because buying and selling activity is constantly going on in the market, right? The sellers are pushing the market to one side, the buyers are pushing the market back. It's kind of like a tug of war between the buyers and the sellers. So because of the activity in the marketplace, it makes the marketplace to have a particular structure. But overall, the side with bigger volume and the side coming in with higher volatility is what's going to advance at the end of the day. So when it comes to trend, when the market is trending, the formation of a downtrend looks like this. This is how a downtrend is formed. So we have sellers coming into the market. We have buyers pushing the market up again. Sellers coming in harder into the market. Buyers pushing the market up. Sellers keep coming in hard into the market and ultimately pushing the price of that market down. Now you can see we still have buyers in this market, but the buyers are not strong enough to overturn the sellers. The sellers keep, pushing the price downwards and downwards and downwards, and that creates a certain type of structure, which we now know to be, bearish market structure. Okay, so talking about structure, we have different types of structure. We have the bullish market structure, we have the bearish market structure, and of course, when the market is indecisive, we can say the market is consolidating or the market is ranging. Now we have done the structural view of the bearish market. Now let me show you the structural view of a bullish market. Okay, so a bullish market, when the market opens, let's assume it starts from a very low price. And of course, when the price is low, everybody wants to get in on that price. Remember, you want to buy low and sell high. Okay. Now, going by that concept, everybody wants to buy when the price is low. Now, when people start buying this market, the price of this starts going up. Okay. And then it gets to a point whereby the buyers are exhausted. They're like, okay, I'm going to take my profits from these markets. So taking their profits make them sellers in the market, because obviously they have to, sell what they bought to make profits from the market to, take it out. So they start selling the market. And of course, new sellers are involved in this market as well. So the tug of war starts between the buyers and the sellers. Now the buyers are in control of the market, always pushing the price of the market to the upside. Okay, now that's what a bullish trend would look like. And of course, a bullish trend is going to have bullish market structure. Okay, so this is like a basic introduction into market structure. The truth is we can't really talk about trends without talking about structure. Okay, they are very, very synonymous and they go hand in hand, right? Now, when the market is not trending to either direction, okay, when we don't have a bullish market or we don't have a bearish market, but of course, trading activity is still going on in the market, right? But no side of the market is able to overturn the other side, right? Now, the market starts at a low price, it goes to a high price, it comes all the way back down to that low price, it goes all the way back up to that high price, and it comes all the way back down to that low price. And this can give us a sideways movement of the market, a sideways formation of market structure. So this is what we know as a ranging market, because this market is ranging in between, this zone here and this zone here. So we call this a consolidating or a ranging market. They mean the same thing, right? This is a downtrend. This is also a bearish market. This is also bearish market structure, while this is an uptrend. It's also bullish market structure. And yeah, it's also a bullish market. This here is a consolidating market, is a ranging market, is an indecisive market. These terminologies all mean the same thing. Okay, so yeah, these are some of the terminologies that we need to familiarize ourselves with when it comes to trading the foreign exchange market. Just to recap, we have talked about trends. We have talked about how the trends are formed. Who are the partakers of this trend? Okay, the partakers of the trend are the bulls, which are the buyers, the bears, which are the sellers. Okay, and then we talked about when we want to buy a particular market, we say we are going long on that particular market. When we want to sell a particular market, we say we are going short on that particular market. Okay. Now, popular sayings and slangs when it comes to trading the foreign exchange market, I've been using them all day. The trend is your friend. And what that simply means is, when the market is trending to a particular direction, you want to be trading in that direction of the trend. Okay. You want to be trading in the direction of the trend. Now think about what we know to be buy low and sell high. And also the trend is your friend. Now, these two sayings in the foreign exchange trading community, they are very, very important. Okay. They are very, very important. Buy low, sell high, and the trend is your friend. Now, with the idea of the trend is your friend, you always want to be buying in a bullish market, okay? And you always want to be selling in a bearish market, right? Meaning that in this market, right, your trading opportunities are going to come from areas such as this, okay? Areas such as this, okay? And areas such as this. Why? Because you want to be buying the low and selling the high, okay? Now, in a downtrend, your trading opportunities are going to come from areas such as this, okay? Areas such as this, okay? And then areas such as this. Now, in a ranging market, since the market is indecisive, we really don't know where the market is going. We really don't know what direction the market is heading to. We stay away from a ranging market, okay? We typically stay away from a ranging market. We like to wait for the market to show us the direction it's heading to, just so we can trade in line with wherever the trend is going. Why? Because the trend is your friend, and we always want to buy the lows and sell the highs, okay? Now, the idea of this even comes from the fact that, of course, everybody wants to buy something at a very low price. And once people start buying at a very low price, the price starts increasing, right? Now, there are a bunch of people who are looking at the price like, damn, I just missed an opportunity to buy this at a very low price. If indeed I see the price come to some certain levels, I'm actually going to get involved with that market. I'm going to buy the market again. So from the opening price, people look at this like, man, the price started from here. This is when, it was listed on the market, okay? It was listed on the market for, let's say, this price. And then people started buying this commodity right now. Now, they bought it all the way up to this price, right? I'm going to change the color of that to black. Now, they bought it all the way to this price. And for this price, I need the price label to be showing. And then here also, I need the price label to be showing, okay? So people started buying this item at 1.25001, and then the price has moved to 1.29759. Now, there are a lot of people looking at this like, if this price can just come back a little bit, I would love to be in this market. And when they look at this, they are like, I don't necessarily need the price to come all the way back down to the starting price. If it can come anywhere close to the starting price, if it can come anywhere within this area here, I'm willing to buy this market from around there. So they kind of formulate an area whereby they are willing to buy the market from. If the price can just come back, please, if the price can just come back, give me one more chance for me to get involved. Even if it doesn't come back to the opening price, if it comes back to anything close to the opening price, I'm going to buy this market, okay? So these guys now form an entire area whereby they are willing to buy when it comes to that area. So that area is now the low that these guys are willing to enter from, right? Now, when the market gets to this area, obviously these guys are buying these markets from this price, okay? Now, once they buy this market from this price, they are expecting this price to go higher than the previous high price that the market has made. So we're going to get into all of this when we talk about market structure itself, the characteristics of these structures now. And then, yeah, we're going to get into all of these. But for now, I just need you guys to understand how all of these things come to be in the market. Okay, so when the market moves again, there are other people who are looking at this market like, damn, we missed again. We have another area whereby if the market can come to this area, we'll be willing to buy this market. And when it happens again for the third time, a lot of people come back to say, damn, I missed it again for the third time. You know what? I have an even bigger area. I just want the market to come back to this area and give me an opportunity to get in. And that's how a trend is formed. You can see the exact same thing that happens in an uptrend. is the exact same thing that happens in a downtrend, okay? So the sellers are looking at this like, damn, I missed an opportunity to sell this and make some money. If you can come back to a higher price, I'm going to sell it from there, okay? So that's the exact same thing that happens in a downtrend. Now you can see in a ranging market or in a consolidating market, we don't have, the market is indecisive. It has not really gone to any direction yet. It's still bouncing between, a particular range. That's why we call it a ranging market. So typically we tend to avoid this type of market when it comes to trading, okay? Yeah, so I think that covers everything that has to do with the terminologies that I wanted to bring to you guys. And yeah, how trends are formed. I just explained how trends are formed. I just talked about the types of trend, but I'm going to leave the characteristics of the trend for when we get into, market structure specifically, okay? When we get into technical analysis for real. Now, what's going to happen right now is I'm going to look through the outline. I believe there are some of these things that I should have, done a separate video for all of these things. But, as at the time we were doing, how to navigate between MT4, MT5, how to use TradingView, we mentioned a lot of these things already. So what I'm going to do is, the next topic we're supposed to go to is technical analysis proper. So introduction to technical analysis. What I'm going to do right now is I'm going to go over the outline again. And I think there are some things that I can pick out of here and make separate videos on them. Things like what is the value of a pip, how to calculate pips, stop loss, take profits. We can go into that in detail. We can talk about market executions in a separate video, how to use depending orders and things of that nature. And of course, I'm going to teach you guys as well how to use a lot size calculator. So this particular block here, I'm going to do a separate video on this particular block, but most of the things that are on this block here, candlestick anatomy, how candlesticks are formed, understanding candlestick movement, time frames, how to navigate between time frames. We talked about most of all these things when we were talking about how to use MT4, MT5. So this is going to conclude this particular video right now. And in the next video, I'm going to be talking about what is PEEP. We're going to be going into PEEPs in detail. We're going to be talking about how to calculate PEEPs. Now, I'm going to be showing you guys the manual calculation, and also I'm going to be showing you guys how TradingView automatically calculates your PEEPs for you. And then I'm going to get into stop loss, take profit, explain how they work, how to use them, and explain in detail how to use depending orders. And of course, I'm also going to show you how to use a lot size calculator, because using a lot size calculator is in a way tied to, the concept of pips. Is also tied to so many other things. Like obviously I mentioned that your lot size is representing your risk. Okay, now when it comes to your risk, you are just going to choose whatever percentage of your accounts that you want to risk. So your lot size is tied to your account balance. Your lot size is tied to, the number of pips that you are risking on a particular setup. There's a whole lot when it comes to that, and I'm going to explain all of that in the next video. Now, I just want to say thank you guys for being a part of this. Thank you for watching this video to the end. And yeah, I'll see you guys in the next class, man. Peace.